I've been investing for a long time, and one of the things that's dramatically changed is the number of tools that are available to investors today. When I started investing, if you wanted leveraged exposure to a stock, it usually wasn't as simple as just buying a ticker symbol. You might have had to borrow on margin, or manage a more complicated strategy, or use tools that everyday investors just weren't comfortable with. And today, products exist that package that exposure into a familiar ETF structure. And a good example is the ProShares Ultra SpaceX ETF, ticker SPCF. SPCF is designed to target 2x the daily returns of SpaceX minus fees and expenses. Instead of an investor having to borrow on margin themselves, the fund provides leveraged exposure through a single ETF that can be bought and sold in a brokerage account. That's one of the biggest changes I've seen over the years. Access to certain investing tools has become much simpler, but it's important to remember that simpler access doesn't mean less risk. SPCF is designed on a single company, SpaceX, and it's designed to magnify daily moves in the stock. If SpaceX rises, gains can be amplified, but if SpaceX falls, losses can be amplified as well. And because the fund has a daily investment objective, returns can differ from 2x the return of SpaceX over time periods longer than 1 day. The point isn't that these products are right for everyone. It's that investors today have access to tools that simply weren't available to most people when I started investing. And as always, investors should understand their objectives and consider monitoring their investments in line with their goals and risk tolerance. So read the prospectus before investing. The objectives, risks, charges, and expenses are available at ProShares.com and link in my bio. This is education and not investment advice. Okay, so we have the plan. Let's go.